popped open. All right, so thank you everyone for joining. Let me go ahead and start the recording on Zoom. Thank you everyone for joining this Chicago Urban League presentation today. And today we'll be talking about budgeting, how to set up your budget correctly for your business. We're live on Zoom, right? So we are live on Zoom with the Chicago Urban League today. And the benefit of being on a Zoom is that you'll have access to the slides. So we do have a PowerPoint presentation that you'll be sure to have access to, right? And then on top of that, you'll have access to the spreadsheets, the examples and everything like that. So we are live today. For those that are just now joining us, we're live on Zoom with the Chicago Urban League. And so shout out to the Chicago Urban League, talking the entrepreneurship cohort. So congratulations to everybody who made it right to the league program. I've been doing this program been a part of it for about 5 years now. And I know it's a very, very competitive program to get into. So definitely big shout out to those that, made it into the program, and hope you have bigger and better things ahead of you. And so today we're live on Zoom. We're also streaming live on Facebook and Instagram. So shout out to the Facebook and Instagram family. For those on Zoom, this is recorded, so you will have access to rewatch it. James, your instructor, your coordinator, will have those details. And today we'll be talking about budgeting today. All right, so we'll be talking about budgeting. Let me give a few shout outs real quick. So with that, let me go ahead and start sharing my screen. So today, as previously mentioned, we'll be talking about budgeting. A few etiquette items. If you're not speaking, right? If you're on Zoom right now, you're not speaking, we just ask that you mute yourself. And then if you do need to speak, just unmute or basically put your question in the chat. If there's something that you want me to repeat, feel free to let me know. Hey, I need you to repeat this. If you have questions throughout, just let me know. You can feel free to cut me off at any time. This is mainly for our Chicago Urban League class, right? The reason why we stream it live on Facebook and Instagram is so sometimes we get questions that can benefit the entire group, maybe something that somebody is not thinking about. And in general, we want to spread this information to more people. At the end, we'll save give or take about 10 minutes for Q&A. So we will be going until about 7:30 p.m. Central. And so with that, my name is Jeff Badu, and I'm a licensed certified public accountant. Thank you guys for joining this Chicago Urban League presentation titled Costing It Out, Teaching You How to Budget. For those who don't know me, my name is Jeff Badu. I'm a licensed certified public accountant. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. What we do is we provide a suite of financial services, including our marquee company, which is Badu Tax Services. And that's the firm that does tax preparation, tax planning, and tax representation for individuals and businesses across all 50 states in the U.S. And we also have clients in over 25 countries at the moment. Then we have our real estate investment company, Badu Investments, LLC, which invests in apartment buildings, rental properties, mainly on the south side of Chicago, in efforts to restore traditionally underserved communities. Currently, we have over 200 units under our control. And what we do is we stabilize and we improve the units in exchange for cash flow, right? Then we have Badu Life and Health Solutions, LLC, which is our life insurance company that provides life insurance products and solutions to individuals, families, and small businesses. Then last but not least, none of this would really mean a whole lot to me today if I wasn't giving back to the community. And that's where we have the Badu Foundation. And that's where we provide financial literacy education to the youth ages 6 to 18, where we teach them on topics such as budgeting, saving, investing, and scholarships. My purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. All right. And today we'll be learning about budgeting. All right, budgeting. The agenda for today is we'll first understand the cost of key activities key activities and resources. Right, basically the first time we've met. So this is our day 2 of 3 for the Chicago Urban League finance portion of the program. The first day we talked about how to come up with your pricing, how to better understand your industry, and talking about the 4 basic financial, or the 4 major, I should say, not basic, but major financial statements to become aware of. All right, which is the profit and loss statement, the balance sheet, the cash flow statement, and then the statement of shareholders' equity. All right, then we talked about how to price your product or service the right way, using different methodologies. For example, industry reports, looking at your profit margin, right? Looking at what your competitors are doing, which I usually don't recommend, but you do want to get a sense for the competition, what's out there, right? What others are offering. So today we're going to focus on the expense side. So the first time we focus on the top line of the P&L, the profit and loss statement, which is the revenue. And today we're going to put it all together and also focus on the cost aspect, the expenses. And the nice thing as a business owner is if you have an expense sitting on your books, you can usually write it off or claim it as a business tax deduction. That's one of the benefits of running a business in the United States of America. If you spend money on advertising, clothing, or let's say travel, right, or Apple Watch, that's all going to be deemed tax deductible if it's used to benefit the business. So you can claim business expenses as a tax deduction or as a tax write-off, which essentially helps reduce or minimize your taxable income. All right, we have clients today that pay $0 in income taxes each and every year. And the reason for that is because you're using very, very smart and savvy strategies to help reduce their tax liability down to 0 each and every year. All right, so we'll talk about how to gain a better understanding of your cost structure in your business. And then we'll do a budgeting introduction. So I'll introduce to you what a budget looks like. We'll go through an actual example of a not a real life, but we'll do a demo budget. Talk about all the line items that you would want to include in your budget. And then, so we'll introduce it and then we'll demonstrate it. And then throughout the day or throughout the session, you can feel free to ask questions. All right, we'll be here for about an hour and 15 minutes. So at about 7 p.m. Central, about 7:15 p.m. Central, I'll probably just open it up for Q&A. But remember, you can ask questions at any time. If you're on Zoom, you can just unmute yourself and then ask your question. Or you can type it in the chat box. And then if you're on Facebook or Instagram, you can also type it in the chat box as well. All right, so let's talk about understanding the cost of key activities and resources. Right, understanding the cost of key activities and resources. I'll say this pretty often, in that business owners must be able to track the money, right? Business owners must be able to track the money, because guess what? If you can't keep track of the money, you don't have a business. You have what's called a hobby, right? Nothing wrong with a hobby, but understand that if you truly want to call yourself a business, a legitimate and operating business, a well-oiled machine, you've got to understand your finances. You have to understand your money, even if somebody else is managing it for you. Right? You still want to have an understanding, the fundamentals of your finances. You want to know how much revenue is coming in each and every month. And you want to know how much expenses, money that's going out the door each and every month. One of my advice to you today is look at your expenses as investments. What if we change our mind from more scarcity thinking as, hey, this is costing me money, into, hey, I'm investing money into my business, the abundance mindset. I'm investing money into my business, and it is essentially helping me grow in the right direction. Like, what if we looked at our P&L, our profit and loss statement, and drilled down every single line item and said, you know what, advertising, this is an investment. Right? This is an investment. This is not a cost. When you call something a cost, it has a negative connotation. It's like, I got to spend this money. Right? Instead, I want to spend this money so that I can grow my business. Imagine if you started thinking like that. Imagine the things you'll be able to invest in. You'll make smarter investments, and at the end of the day, you'll make more money, which means you'll probably make more of an impact to society. whatever it is that you deem that impact is. Right? So understand the cost of key activities are expenses, or in my opinion, investments that help you grow your business. Right? For example, marketing or advertising, marketing on Yelp. And we're going to do a Yelp exercise here in a second. But advertising is one. And then also supplies, right? Looking at different supplies. Software, employees, when you hire people. All right. These are things that can ultimately help you grow your business in the right direction. And the goal is to turn these costs, these so-called costs, into revenue. And that's why I say think about a cost as an investment. Right? Think about a cost as an investment. When I buy a piece of real estate, it's not a cost to me in the building that I buy. Right? It's not an actual cost. What is it? It's an investment. It's an investment because that investment is going to yield me a return, preferably every single year or every single month. Right? And then when I sell or when I dispose of this investment, I get a return, another return on my investment in the form of a profit, in the form of a gain on my sale. All right, so one thing I encourage you to do is to transform your mind into thinking, oh, why am I spending money? As things you're putting into your business so that you can grow your business. Right? Advertising, that's one. We'll go through a real example of advertising. And now what you can do is you can incorporate your investments or your costs into your pricing. So if you make t-shirts, or if you plan to sell t-shirts at $5, well, I would hope your t-shirts aren't costing you more than $5 to make, right? Because that would be a hobby, basically. That would not be a real business. Instead, if you sell t-shirts at $5 and your profit margin is, let's say, 60%, then you would probably want to sell your t-shirts, or you probably want to have costs on your t-shirts at no more than $2 a shirt. Right? No more than $2 a shirt. All right? And one thing to note, do not cut costs in areas that are growing your business. If you found an investment, this is why we want to look at them as investments, not just the cost. If you found something that's going to help you grow, that's actually putting revenue in your business, why in the world would you get rid of it? It makes no sense. Yeah, you can cut back on certain things and all that. And I'll actually, as part of our example today, I'll show you what I mean by that. But at the end of the day, why would you get rid of an investment that's producing you money? Like, for example, we don't sell real estate. Why? For one, we do a lot of due diligence on the front end to make sure we're getting into good investments. And why in the world will we sell a cow that's feeding us every single day? It makes no sense. Why would you sell a cash cow? Right? It makes absolutely zero sense whatsoever. Some people might argue, oh, the market, the timing of the market. Well, guess what? The market is always going to go up over time. Always. In the last 10 years, when has the market not gone up? Right? It's always gone up. In the last 100 years, when has the market not gone up? It's always gone up. So why in the world would you sell an asset that's producing you income? It makes no sense. Grant Cardone would tell you this, by the way. He's one of the big real estate investors out there. He was like, one of the dumbest things, I'm sorry, excuse my language, one of the most unintelligent things that he did in his life was sold real estate. Like, he said he probably should have kept this real estate because it's producing you cash flow. Now, the only reason he did have a legitimate reason as to why he sold it was to get into bigger deals, right? To sell it for a profit and then to get into bigger deals, which is okay, right? But if you're just selling just to sell, it makes no sense. Like a stock that's going up, why in the world would you sell it? If you're a long-term investor, assuming. If you're a short-term flipper, okay, I get it. All right, but if you're a long-term investor, you see Apple that's going up, why in the world would you sell Apple? It makes no sense. If you know Apple is just going to keep going up. So why not wait it out, let Apple keep growing, and then at a future time, whenever you deem fit, you sell it at that time. Think about it. What if you can go your whole life without selling good investments? Right? If you can just wait it out a little bit, even in a downturn, if you can just wait it out, collect the cash flow. This is why anything you buy, it should be income producing. Something that makes you money monthly, preferably. For example, a rental property that makes you money monthly. Tenants pay you monthly, right? For me, I'm keeping that investment all day, every day. I have no reason whatsoever to sell this cash cow. It makes no sense. Why in the world would I sell a cash cow? Right? Now, on the flip side of it, eliminate costs that don't generate you a return on investment. That advertising platform that's not generating you results, and you've tried it out for 3 to 6 months, get rid of it. Get rid of it. If it's not making you money, if it doesn't make dollars, it doesn't make sense. It's real simple. Right? If it don't make dollars and you intended for it to make you dollars, then it don't make sense. As long as you've tried it out. I wouldn't say, hey, just go at it a month. Give it 3 to 6 months. Give it time to build some steam a bit. And if it's still not working, hey, it's got to go. If you pay $12,000 for something and it's only generated you $5,000 and it's been a year, get rid of it. Get rid of it, right? Assuming there's no cyclical effects of that investment. Maybe it needs 2 years to, gain steam. And then try to leverage resources. Leverage is the ability to do more with less. So maybe you have a team member that's really good at marketing and also really good at sales. Well, maybe create a combo role where they do some marketing and then do some sales instead of hiring a completely different person for marketing and a completely different person for sales. Right? And there's a big difference between marketing and sales. All right, so just something to keep in mind. So with that being said, let's just go through an example real quick. Let me go ahead and share my entire screen for those on the Zoom. So if you're on Facebook and Instagram, first of all, welcome. Second of all, this is a presentation or a virtual experience for the Chicago Urban League. Right, this is a virtual experience for the Chicago Urban League. And so we have a presentation that's going on right now on Zoom, and you guys get to listen to it. You don't get to actually watch the presentation, the slides and the examples, but you can listen to it, take notes, right? You can listen to it and take notes and be able to gain value from the information. All right, so let me give you guys an example. So Badu Tax Services was founded in 2016, September 2016 to be exact. And I'm going way back, right? Way back on the memory. All right. Okay. So Desi 2016 says she's taking notes. Absolutely. Always take notes. Always take notes. Thank you for joining, Desi. And then Perry, let's see. Perry Cartier says true. Absolutely. All right. On Instagram. Shout out to everybody for listening. So in general, Badu Tax Services was started in September of 2016. And in order to get started, right, with any business, we had to advertise. We had to put out some marketing. So one thing that we found online through research was Yelp. Yelp, right? Yelp, we found out that it could be a lucrative investment. I basically was, somebody reached out to me and said, hey, you just started your business. Congratulations. I think it would be good to try out Yelp. So they said, hey, why not spend $100 with us, right? $100 a month with us. So let me put some things in here on the screen. Hopefully everybody can see this. So the Yelp investment was $100. And this is monthly, so we'll put these figures as monthly. He said, hey, just spend $100 with us. Just $100. I said, cool. But by the way, we'll give you $300 for free. I said, whoa, okay. You're going to give me $300 for free just for spending $100 a month with you? I'm like, cool, sign me up. I've already gotten a return on my investment. right? I spent what, $1,200, and you're gonna give me $300 for free, right? What it is? So we take 300 divided by 1,200. That's 25%. We multiply by 100. Yeah, that's a 25% return on my investment from day one, basically. I'm like, cool, this is a good investment. I mean, I haven't got anything out of it yet per se, as far as revenue, but hey, I give you $100 a month, and then you give me 300 for free. Cool, let's do it. And the nice thing with Yelp is that it's pay per click, meaning no, you don't get charged, you don't get billed unless somebody actually clicks on your ad, right? So they're telling me it's guaranteed ads. Guaranteed, right? Guaranteed clients. I said, okay, what's the hype all about? So at $100 a month, Yelp was able to generate me 10 new clients each month, like 10 paid clients. All right, so number of new clients, 10 a month. Right, 10 a month, which is pretty decent. I mean, it's not anything that's, depending on your industry, it's not staggering or anything like that, but 10 new clients. And our average tax preparation price, so our average tax prep price at the time, of course, this is no reflection of what it is now. At the time was $150. Right, so average return per client, so average revenue, or let's just say monthly revenue per client. Revenue. And instead of per client, we're just going to do the total. So monthly revenue equals 150 times 10. We made $1,500 a month. $1,500 a month off a $100 investment. So what is that? Return on investment? Return on investment is a calculation where you take essentially how much you've made. So it's your revenue minus your expenses divided by your expense or your investment. Remember, we call expenses investments. So we take our monthly revenue minus our monthly expense, right? And then we essentially divide it by the monthly investment. ROI, and then we want to put it in percentage terms. 1,400% return on investment. 1,400%. Right? And somebody asked the question, what's the new tax prep price? I mean, we start off at about $250 now. Right? We start off at $250. On average, for a business owner, on average, they're paying about $500. And then if they're making, if they're like a S-corp partnership, they're paying about $1,000 on average, right? So we basically went from $150 average now to $500 average, right? So 1,400% return on my investment every month. I'd say that's a pretty good investment. I don't know too many stocks that will generate me a 1,400% return on my investment every single month. All right. So just keep that in mind. Desi asked the question, how many hours to prepare one tax return? I mean, back then it probably took us about 30 minutes. All right. Desi has 500 average for the basic tax payer without a business. No, it's 250. It's 250 for the average without a tax, without a business. But keep in mind, the 150 was an average across all of our clients. Like with a business, without a business, right? So most of our clients back then were individuals. They were individuals. So return on investment, 1,400%. Now, there's actually a mistake in this calculation. Does anybody know on the Zoom or on Facebook and Instagram what the mistake I made in this calculation? Anybody? It's not easy to tell, by the way. This is actually a tough question. Shout out to Mr. Candy, by the way, listening live on Facebook. All right. Anybody want to take a stab at where the mistake is in the calculation? All right. So with that, and shout out to Dusty, she says, let's work together. Yeah, reach out. Feel free to shoot me a DM. We can definitely talk afterwards. But basically, the mistake that I made in this calculation is the fact that this investment amount, this Yelp investment per client, is one time. It costs $10 to gain one client. However, right, the average client stays with their tax preparer for 7 years, right? 7 years. And it only costs $10 to acquire this client as far as advertising goes. So the mistake I made in this calculation was I should have multiplied this number by 7. Now what's my return on investment? 10,400%. Is that a good investment? Like, would anybody want to invest in this? Feel free to shout out. Like, would anybody actually pay for this? Anybody? Mm-hmm. For sure. For sure. Got it. Okay, so Deja's asking, can I simplify this? So, yeah, that's a great point, Deja. So, basically, right, I have the opportunity to invest $100 a month into Yelp ads. The way Yelp works is that you set a certain budget. And then what people can do is they can click on your ad, and you only get charged if they click on your ad. So what we did was we ran ads, and we set the budget at $100 a month. Right? Nowadays, by the way, just to let you know the growth, we spend a minimum of $500 a month because this was such a good investment. Right? So $100 a month, and on top of that, Yelp will give me an extra $300 for free. They'll give me 3 months free, basically, which I said, man, that's a good deal. All right, so with that being said, $100 a month yields me 10 new clients every month. Right, 10 new clients. Out of those 10 new clients, go ahead, I'm sorry, Deja. Correct, Yelp ads. Mm-hmm. That's right, 10 new clients. That's right. So 500 was saying that, so this is back in 2016, right? 500 is saying in 2020, we now spend 2021, sorry. We now spend a minimum of $500 per month on Yelp ads. Exactly. So this is a 2016 example, but similar numbers can be achieved now, right? So exactly. So basically the average tax prep price that we charge the client, the 10 clients, is $150 per client. Right? So that puts us at $1,500 in revenue per month for these 10 clients that all we had to spend was $100. All right? So with that, that leads to a monthly revenue of $1,500. 1,500 divided by the, basically you take 1,500, then you subtract your cost, your 100, which is essentially 1,400. 1,400 divided by 100 equals 14, 14, which you multiply by 100 to get the percentage. So it'll be at 1,400% return on investment. All right, does that make sense, Deja? I mean, what components do you still need help with? Mm-hmm. Do you see the Zoom screen? For sure. What parts of the formula would you need broken down? Yeah, so 1,500 is the average price of a tax return, which is what we're charging the client, times, right, 100 average price, which is 150, times the number of clients, which is 10 clients. Yeah, 150 times 10 is 1,500. Exactly. Does it make more sense now, Deja? Absolutely. Yeah, sorry for any confusion, right? We never intend to confuse anybody on these calculations. But to take it a step further, right, we multiply our return amount, our monthly revenue amount by 7 because the average person in America stays with their tax preparer for at least 7 years. In our firm, our trajectory is probably about 10 to 15 years. Right, but we're just going to use the average to be conservative because that's what the industry report that we read in IBIS World told us. Why is it important to read industry reports? Because it tells you exactly what you need to know about your industry. So in the IBIS World report, it stated very boldly, the average person in America stays with their tax preparer for at least 7 years. Right, 7 years. So what we can do is we can times this revenue per client by 7, basically, because that's what the average. That's our total return for the client. We take our total return divided by the one-time investment, the advertising, which is 100. So 10,500, or essentially in this case, we have the average price, right? The 1,500 times the 7, 1,500 being 150 times 10, and then we multiply that by 7. And then we get a return on investment, which is the net profit of the investment divided by the investment itself. In this case, 10,400% return on investment. Now, I don't know too many stocks that can actually do that. Right? So why do we invest in Yelp? Real simple. Why do we still invest in Yelp? It's real simple. We ran the numbers. I would say go through each and every expense line item on your profit and loss statement, just like we're doing now, and say, hey, this expense, right? This employee, this contractor. We can do a same analysis with a contractor. How much are we paying them? How much revenue are they bringing to the table? And what's the return on investment on that contractor or that employee? We can do the same thing with every expense. The only thing that's going to be hard to do is fixed expenses like rent. Something that's fixed, right? That you pay monthly regardless of how much revenue you're generating. So this really works well. This analysis works well only for variable expenses. Things that fluctuate as you spend more money or as you make more revenue. So advertising. The more you advertise, typically the more money you make. The more people you hire, hopefully, right, the more money you make, typically. So those are variable expenses. And then you have fixed expenses, which are like rent, right? Certain utilities, maybe the phone bill that does not fluctuate month by month. It's a fixed cost, whether you made $1,000 this month or you made $10,000 this month. All right, so I would strongly encourage you to run this analysis. And for the fixed cost, you just want to compare rates each year. Maybe that rent that you're paying, hey, maybe you don't even need a facility. Right now, we operate out of a home office. You know, we've been offered plenty of times, hey, do you want a physical office? We said, no, we don't want a physical office. We're a virtual CPA firm. Why would we need a physical office for? Everything we do is virtually, including the delivery of this presentation tonight. All right, so you always have to understand what you're getting yourself into. My advice, every single month, go down the list of your expenses. All right, go down the list of your expenses and see, hey, this expense, is it producing me a return on investment? Yes or no? Simple. Right, every month, go down line by line on your P&L, your profit and loss. Is this generating me revenue? And then take it a step further. Is this an expense I need to increase because it's generating me a lot of revenue? Or is it something I need to decrease because it's not generating me as much, but it's still a valuable? My advice, be on the side of increasing that investment. Right? Good investments, the more money you pour into it, the more money it's going to make you. You know? And that's it. And Desi says, I love it. Virtual is the deal. Absolutely. Virtual is the deal. COVID-19 only escalated our future plans, basically. Right? We're a 100% virtual CPA firm. All right, so we got some questions here. And if you can, ask your questions in the public, so everybody can see your questions, that would be great. Kyosha says, yes, that's worth the investment. Absolutely. Because if you're only spending $100 a month and you're getting 10 new clients per month, it's like paying $10 per child, but you're making $150 per client. Now, I believe that should say per client, right? It depends. It depends on your industry, perhaps, and maybe even a daycare center, right? But $150 per client. That's good. All right. And then Shanice says, let's see, monthly revenue. Hopefully we clarified that monthly revenue amount, that question. 150 times 10 equals 1,500. The reason why we got 10,500 is because we multiplied that number by 7, because the average person stays with their tax preparer for at least 7 years. All right. So hopefully now, is there anybody on the Zoom that has any questions about what we've talked about so far? Comments, anything you want to share before we go into a deep dive of a budget? All right, no questions. So I'm assuming everybody's clear on the return on investment. So the thing about return on investment, it is the number one most important item on basically for an investor to look at. Right? So if you want investors, if you want equity investors, the number one thing they care about most is your return on investment. How much money can they return if they give you the money? In real estate, we typically like to see at least a 20% cash on cash return. Meaning if I invest $1,000 into a project, I at a minimum want $200 per year on my investment, a 20% cash on cash return. The beautiful thing about real estate return is that you can accelerate it, right? A typical, let's say you bought a stock, the stock market on average earns you about 10%, right? But the reason why we can say 20% in real estate is because of the leverage piece, because you're using less of your own money to buy more of something. The bank is always going to give you at least 75% of the money. They're your 75% partner. And the type of lenders we work with now, they're willing to give us 80% of the money. Right, 80%. So that means we only got to come out of pocket 20% if we come out of pocket. We can use other loans to cover the 20%. We can raise capital through equity holders, people who take an ownership stake in the property. All right, we can do a lot of things. So always understand that you should be keeping these things in mind when it comes to your business. And remember, if something does not generate you revenue, if it's not generating you a return on your investment, then you should probably get rid of it altogether. You should probably get rid of it or minimize it. All right. So with that, let's go through some more budgeting content, and then we'll look at a real life or I should say not a real life, but a demo budget. All right, so one thing about budgeting is everybody on this planet, including Bill Gates, Jeff Bezos, Warren Buffett, myself, yourself, everybody should have a budget. You should create this budget typically at the beginning of each year or create it at the end of the previous year, right? And you should have two budgets. You should have an annual budget and then a monthly budget. An annual budget is simply the subtotal of the monthly budget. It's real simple, right? All 12 months, subtotal into your annual budget. Now, what a budget does is it helps you stay on track. It helps you keep on track. Because what you can do is you can compare the budget, what you've actually budgeted, right, to what has actually happened, your actual results. Yes, you should have a budget. There's nothing wrong with having a budget. I have a budget today. And I look at it at least once a week, right? Everybody should have a budget, especially when you have a lot of things going on. I have to budget not only for myself personally, but across all the various businesses within the Badu enterprises, right? So with that being said, you have to make sure that you have a budget. And Desi says, yep, she has a budget. Absolutely, she has one too. Everybody on this call should have a budget. Nobody's too good for a budget. Right? Nobody's too wealthy or anything like that. The wealthy folks know for a fact that they've got to budget their money. As you make more money, you should be paying more closer attention to your budget. You know, it's not about necessarily, hey, I've gotten to a certain level, so let me stop budgeting. Don't let your guard down. Don't be complacent. Right? Keep at it. The same habits that took you to where you got to, use those habits or use better habits. Right? Maybe instead of doing it on pencil and paper, like I used to do, maybe use apps, right? Like Mint, or Personal Capital, for example. So one thing you can do with a budget is you can compare what you've budgeted to the actual results of what's happened. And then you can have multiple budgets that incorporate different components. You can have multiple budgets for, let's say, a specific service, right? You want a budget for tax preparation versus tax planning versus tax representation versus your insurance business. You want a budget for building A and then building B and then building C and then building D, right? So that's what I mean when I say different components. It's component budgeting. A budget should always be a part of your business plan. And I know for the Chicago Urban League, you have to have some sort of budget within your business plan. You have to have a business plan in general. All right, so you want to put at least a 3-year budget in there. To be honest, a budget is no more than predicted numbers using your industry report and or factual data that can back up your numbers, essentially. Right? So you do want to set a budget. It's much easier when you have results from a certain year that you can use as a guideline or a benchmark to generate your budget for the following year. The key, continuously update your budget based on different factors. So seasonality, for example. Tax preparation is usually when we generate the most revenue, right? Tax season is when we generate the most tax preparation revenue. So for those months, revenue is more escalated than other months. Now we're still to this day figuring out, hey, how do we keep up and have that same revenue, right? Have that same revenue flow throughout the entire year instead of, hey, it's very, very high during tax season and then it slows down a bit during non-tax season. We're still trying to figure it out, and we do have a pretty good game plan as to how we'll go about that. So you do want to factor in seasonality, right? Certain busy times of the year. So update the budget compared to the actual. If something is lower than what you budgeted, why is it like that? Right? Why is it that way? Just something to think about. All right, so we got some comments here. Let's see. And Desi says she got her set up in Excel. Yeah, nothing wrong with Excel. I usually recommend you use something more automated like Mint. And for your business, Quickbooks. Quickbooks has a budgeting feature in there directly. All right, so with that, let's go ahead and take a look at a sample budget, right, to look at some of the components. So this is essentially the line items. So for those on Zoom, right, we're sharing the screen to share how a budget should essentially look like, or some of the line items. So this is a profit and loss statement. And all you're doing with this profit and loss statement is you're projecting out what you think will happen in 2022, for example. So some items you're going to have on your budget are sales. The number one most important thing, in my opinion, on your budget or on your profit and loss report is your sales, your revenue, how much money you're going to make. Remember, in our first class, we came up with a few ways to come up with your price. And all you got to do is multiply that price by the number of customers you expect. And that gets you your revenue amount, your gross revenue. Now remember, there's a difference between revenue and profit. Profit is what's left over after you subtracted your expenses from your revenue. All right, so sales is usually one line item at the top of your P&L. That's why they call it top line, right? Accountants, I don't know where they come up with this stuff, but they call revenue top line because it's at the very, very top of the P&L line, basically, right? So then you have expenses, advertising and marketing. That's one. You got bank charges and fees. You have commission and fees. All right. So commission is maybe you're paying brokerage commissions. Maybe you're a real estate agent. You're paying commissions. Contract labor are your 1099 independent contractors that you hire. All right. Car and truck. So, maybe you bought an automobile and you're also spending money on gas and maintenance and things of that nature. Insurance. So this is car insurance. This is, let's see here, liability insurance. Any type of insurance that you have for your business, except for health insurance. Health insurance, we usually want to separate that out, especially for tax purposes. All right, then we have interest. Interest you're paying on loans. All right, health insurance. That's another one. Job supplies. Legal and professional services. Meals. So eating out, dining in, when you buy food. Office expenses. Then you have rent and lease. All right. Repairs and maintenance. Salaries and wages. So when you hire people as W-2 employees. And then supplies, taxes and licenses, travel, and then the infamous other business expenses. My advice, try to break down as other business expenses as much as you can. Right? Revenue minus total expenses equals net income or net profit. So my advice, number one, is if you're just new to business, which I understand for the Chicago Urban League, a lot of us may be new to this business game. So if you're new, you might not have something to base it off of that happened in the past. So what you got to do is you got to look at your industry report through IBIS World or Google and basically figure out, okay, what's the price I need to be charging customers and how many customers do I want for the year? You can set a number. Price times number of customers, quantity times price equals revenue. So that's going to be your top line revenue. And then for expenses, the industry report usually tells you exactly what expenses you should be expecting in your industry. So they're giving it to you right then and there. They usually express it in the terms of percentages. They'll say, hey, advertising is 10% of your revenue. Well, what do? You take 10%, multiply by your revenue amount. Real simple. They say, hey, employees, 40% of your revenue. Your profit, by the way, next to revenue, your profit should be the number 2 thing you should be thinking about. If anything, I would back into your other expenses after I've calculated my profit. So if the industry is telling you, hey, your profit should be about 30%, put that number down as 30%. Non-negotiable, by the way. Non-negotiable. Meaning I got to put 30% in my bank account when it's all said and done. If I don't, this business will not run. I will not be satisfied in my business if I cannot put 30% in my bank account. Real simple. It's called profit first mentality, basically. Doesn't mean you're greedy or selfish. It just means you have standards, right? You got to stick to those standards. So you can use IBIS World and back into those numbers. And let me show you an example of an IBIS World report, right? So I'll show you one for hair salons, hair and nail salons, right? Shout out to the beauticians that may be on this call. All right, so hair in this hair salon industry, this one is a bit outdated, but it basically tells you exactly what type of costs you should be expecting. It's real simple. It tells you, hey, in your industry, you should be expecting about an 8% profit. Now, my advice, bump that up to 10%. 8% seems pretty low, right? 8% seems pretty low. You're telling me that I got to put in all that hard work to make 8% on my investment? That seems pretty low. I would bump that up to 10% so that you can at least be above the industry and you can set your goals high, basically. Then it tells you, hey, 44% is typically what you pay in wages. And the hair industry is very, very employee or contractor intensive. So you should be expecting to pay people some money. Then purchases, right? Purchases is another one. Maybe hair, the hair that you're buying to do people's hair. Maybe you provide the service, and then also maybe you sell hair, right? And think about how can you segment it into online. Maybe you sell it on Amazon, Shopify, Etsy. You can always diversify how you make revenue in your business. Depreciation, I wouldn't worry too much about that. That's like chairs and, things, equipment, heavy equipment that you buy. Marketing, here we go. It says beauticians normally spend 1.8%, 1.7% on marketing. I mean, that seems pretty low. That seems pretty low. Maybe it's because it's a lot of foot traffic. Perhaps this is outdated. This is pre-COVID, right? There's not a ton of foot traffic coming into places nowadays. Rent and utilities, that's another one. And then the infamous other. I would always find out, what does this other actually mean? Like, break it down for me, basically. All right? And the industry report will usually tell you what that quote-unquote other actually means. This is a sample IBIS World report. If you have not looked at an IBIS World report and you're a business owner, I think you're making a big mistake. To this day, every year, I review the IBIS World report of all my industries. Tax, real estate, life insurance, right? All of them. Because things change, things evolve over time, and you don't want to be behind the times like Blockbuster or some of these other companies that went bankrupt. The reason why they went bankrupt is because they could not keep up with the market. All right, so once you've come up with that budget, then all you got to do is each month, remember, you have an annual budget and then you have a monthly budget. Annual budget is simply, or your monthly budget is simply your annual budget divided by 12. You go through each line item and you say, okay, in my budget, did I hit my target, yes or no? Right? If you were over, why were you over? If you were under, why were you under? If you're over, do you need to cut back on certain things? If you're under, is it time to invest some money into that area? Or maybe your budget was off. Who knows? Right? Your gut will tell you if these numbers are correct or not. And then each month, when you compare your budget to your actuals, see, hey, this line item right here, is this truly helping my business? Yes or no? It's a simple yes or no question. Is it truly helping me grow my business? Yes or no? If the answer is yes, great. That expense can stay, but then ask yourself the second question. Do I need to put more into this? Do I need to invest more, or should I cut back a bit on this? And that's going to depend on how much return on investment that particular item is generating. Right? And look at your industry. See what your industry is saying that your return should be on XYZ. All right, so with that, let's see here. Shanice says, are startup costs considered a budget or a line item on a budget? I would say that in and of itself is a budget, right? That is a budget. So break it down. Don't just put startup costs on your P&L, your profit and loss statement. Say, hey, laptop purchases, advertising, licensing, Be specific. Be as specific as you humanly possibly can. Right? Be as specific as you can, because that's going to give you better data. The better the data, the better the decisions you can make. All right? And if you think this is too tedious, I don't think you're ready to be in business. This is what it takes. It's not just baking cake, doing hair, and all that. You got to understand the numbers. Now, you can have someone helping you come up with these numbers, but you have better understand or understood what they actually mean. If you don't understand, ask questions. Say, hey, what does this mean? Our profit is up 10% this year. What does that actually mean? Our advertising is down 20%, but our revenue is up 10%. What does this mean? Tell me what it means. Right? Ask the right questions, even if you hire people. The more you hire, the more questions you should be asking these people. Right? If you're a one-stop shop, do it yourself, everything, then you ask yourself the questions. All right, so with that, does anybody have any questions? All right, any questions, whether on the Zoom, Facebook, or Instagram? Any questions? You can feel free to unmute yourself if you're on Zoom. You can feel free to type if you're on Zoom. And then also, if you're on Facebook or Instagram, you can, you can just type in the chat. Let me take a quick 10-second break. Let me go ahead and charge this Instagram phone is on the verge of dying. So let me give it some juice. All right. So let's go here. Does anybody have any questions? Anything they would like to ask? All right. Let me make sure here. There we go. All right, so no questions. Hopefully you guys are learning something today, by the way. Hopefully you're gaining some knowledge and some education from all that we're talking about. All right, so let me allow it here. Okay, so we got some juice on the Instagram. Let me make sure it's actually connected the right way. Give me 1 second here. Here we go. So it's charging nice and good. All right, so I think we got something in the chat. Raz says, I understood all the knowledge from today's meeting. Absolutely. I'm glad you're getting it. It takes time sometimes to get this stuff. I understand this is not something that happens overnight. You got to digest it. You got to do some research. You got to go to the jeffbadu.com website to get more resources on this stuff. It's a lot. Right, so the purpose of doing something like this is more so to introduce you to some of these topics. We don't expect you to become an expert on the stuff after an hour and a half class, right? Absolutely no way. What you got to do is you got to rewatch this at least 2-3 times. You got to go through real life examples, and then you apply what you learned, right? By just learning and not applying, it makes it very, very difficult to retain and to implement. All right, so Raz says, we will be putting a budget together this week. Absolutely. And if you need help from me in any capacity, feel free to shoot me an email at jb@badutaxservices.com. Once again, that's jb@badu, B-A-D-U, taxservices.com. Let me drop that in the chat. And I'll also drop our office number in the chat as well. So that's jb@badutaxservices.com. And then the phone line is 773-819-5675. Once again, that's 773-819-5675. I just put that in the chat. And so with that, we already talked about the budget. So we got the revenue, which is at the top of the budget. And then we have the expenses, which is towards the end of the budget. And then the bottom line, right? Bottom line, remember the accountants, always being creative. They set the bottom line as the net profit, which is the number that comes after you subtract your revenues from your expenses. Your revenues being, money you generate from selling your product or service. Expenses being fixed expenses like rent, certain utilities, fixed salaries, and then variable expenses like advertising, certain utilities, perhaps, supplies, inventory, things that you basically need to run your business. And then net income minus expenses. Net income equals revenue minus expenses. All right, so with that, what are some tools that you can utilize? QuickBooks. Use QuickBooks, right? Me personally, to this day, I use QuickBooks for all my businesses, every single one. I spend 30 minutes once a week, every Friday, going through QuickBooks, and that's across 12 different businesses. Right, 30 minutes, that's all it takes. QuickBooks can be that automated, that simplified for you to go through. It does take some time to get used to it. And next time during day 3 of our class, we'll talk about some accounting softwares, including QuickBooks. And then we'll also talk about how to get business funding. Oh man, it's actually my favorite part of the program is the business funding piece. I'll share with you 40 different business funding sources next time. 40, right? 40 different business funding sources. Now, understand that when you start out in business, you might be only eligible for 10 of the 40. But hey, 10 is better than 0. I'll tell you that much. All right, 40 business credit sources that you can basically jumpstart your business. I'll show you how to get $50,000, right, by the same night that you attend the presentation. 50 grand cash into your bank account or your business funding account. All right, so that's what we'll be talking about next time. So with that being said, use QuickBooks. Like, go to quickbooks.com right after this. It's the QuickBooks Online. There's a free 30-day trial, and start getting used to it. Start getting used to it. The nice thing you can do in QuickBooks is you can actually develop a budget directly in QuickBooks. So not only can QuickBooks help you track your income and expenses throughout the year, right? What you can do is you can also create a budget out of what you've essentially done in QuickBooks. All right, so just something to keep in mind. I love QuickBooks. I use it personally. Pretty much all of my clients use it as well, and it helps them tremendously gain an understanding of where they are financially in their business. And then also, it assists with the tax preparation, the tax return process as well. All right, so with that being said, does anybody have any questions? That was technically the last slide of the day. You know, does anybody have any questions that they would like to ask at this time? Please feel free to unmute yourself if you're on Zoom, or you can type in a chat if you're on Zoom. If you're on Facebook or Instagram, just drop your questions in the chat, and I'll be more than happy to answer those questions for you. All right, any questions? All right, so while we're waiting on questions, one thing to note is that as a business owner, you can pretty much write off everything, right? As a bonus, tomorrow from 12 to 12:45 p.m. Central, 12 to 12:45 p.m. Central, we're hosting a webinar. It is for real estate agents, but I believe you would benefit from it, even if you're not a real estate agent. We're going to talk about all the things a business owner can write off and deduct to save more money on taxes. And we're going to talk about how a real estate agent can pay $0 in income taxes for the rest of their life. I kid you not. We're going to show legitimate, real strategies on how a real estate agent or real estate professional can pay $0 in income taxes for the rest of their lives. Right? If you're not a real estate agent, real estate professional, you should still attend, because we'll still cut your taxes tremendously. So I want you guys to attend that. That's from 12 to 12:45 p.m. Central. All you got to do is shoot me an email at jb@badutaxservices.com saying, hey, I would like to attend. Once again, that's jb@badutaxservices.com. And I'll send you the link to RSVP for that event. It's from 12 to 12:45 p.m. Central. Everybody's welcome to attend. Just shoot me an email at jb@badutaxservices.com. And I'll be sure to get you on the list for the RSVP. And then also tomorrow night from 6 to 7 p.m. Central. 6 to 7 p.m. Central. We usually don't have two events on the same day. But we have Be Your Own Bank. We're teaching you how to be your own bank. 6 to 7 p.m. Central. We're teaching you how to be your own bank, how to become like a JP Morgan Chase or a Bank of America. And you can RSVP for that by texting the word wealth, Once again, wealth to 773-819-5675. Once again, text the word wealth to 773-819-5675. Yes, it is related to taxes, but we're essentially teaching you how to be your own bank. All right. So Stacy asked a question on Facebook. I came in late, but could you possibly explain how I can write off expenses from January this year if I start my business within this month? Great question. So the nice thing with the IRS is that, or with the tax code, is if you started a business, like you just registered it this month, November 2021, but you had expenses that went all the way back till January, what you're allowed to do is backdate those expenses or backdate your business so that you can capture all those expenses in your QuickBooks. Now, you probably were using your personal account to pay for these expenses. So in your QuickBooks, you just want to link that card to your QuickBooks so that it can populate those expenses. And then when you file your taxes, you just say, hey, these expenses, like you show your P&L, your profit and loss, and show that all this income and expense, right, was for the business. Because, hey, I didn't register it, right? I might have made a mistake and not registered it. However, I spent money on behalf of the business, and these are legitimate business expenses. What are some examples of some expenses or write-offs? Hey, laptop. The laptop you're using to listen to the Zoom meeting is a tax deduction. Cell phone. Cell phone is a tax deduction, right? AirPods. AirPods are tax deductible. Right? Water that I'm drinking to hydrate myself while I present to you guys is tax deductible. Apple Watch so that I can tell time, right, as I'm doing the Zoom meeting is tax deductible. Let's see what else. The suit jacket that I'm wearing right now to deliver you guys this presentation is tax deductible. The V-neck that I'm wearing to deliver you guys this presentation is tax deductible. The haircut that I had to get on Friday to deliver you guys this presentation presentably is tax deductible. The logo you see in the background is tax deductible. Books, right? Books that you read to enhance your knowledge when it comes to business or when it comes to wealth building or whatever it is in your field that you're using to expand your knowledge when it comes to your business is, in fact, you guessed it right, tax deductible. All right. So there's very, very few things that you spend as a business owner that are not tax deductible. Very, very few things. Right. So just something to keep in mind. Health insurance premiums that you're paying as a business owner, tax deductible. Right. Pens, by the way, pens that I'm using to sign documents, although we don't do a whole lot of that nowadays, tax deductible. I mean, everything you see in here is tax deductible. This desk that you see, tax deductible. This office chair that you see right behind me is tax deductible. All right. Everything. Keyboard, mouse, chairs, everything. Everything. Your home office, tax deductible. All right. So Shanice asked the question, will the real estate webinar be recorded and available to individuals who work during that time frame? Yes, we will record it. If you want a recording, just send me an email, jb@badutaxservices.com. Once again, that's jb@badutaxservices.com. If you cannot make the 12 p.m. Central webinar tomorrow, then just send me an email and I'll be sure to get you the recording once it's available. All right, so remember, it's all about the knowledge. The knowledge is key. The more you learn, the more you earn. The more you know, the more you grow. And the more you grow, the more the cash flow. All right. So let's do last call for any questions. I did stop sharing my screen on the Zoom because I don't have anything else to present for today. Does anybody have any questions they would like to ask at this time? Right. Remember, if you're on Zoom, you can just drop that. You can just unmute yourself and just speak. Or if you're, or you can drop it in the chat. Right. If you're on Facebook or Instagram, just feel free to type your question in the chat. We'll do about 15 more minutes of Q&A. If we don't get any questions in about 2 minutes, then we'll wrap it up for today. I know you guys may be tired. I usually do my radio show, Money Talks, at this time. But today, I decided to be with you guys at the Chicago Urban League so that I can present to you this information. And next week, by the way, next Monday, same time, same place, we'll be talking about accounting softwares to use to track your income and expenses. for your business and how to get business funding. How to get business funding. I'll be showing you next week how to get at least $50,000 into your account by the end of that day, right? And then if you're an existing business, how to get millions of dollars into your bank account by the end of that week, right? It won't happen by the end of the day, but at least by the end of the week, you can get at least $1 million into your account. Legally, of course. All right, Desi asks, great presentation. I'll DM you. Absolutely. Feel free to reach out. Any questions, partnerships, collaborations, whatever it is, just let me know. I'm always more than happy to help out. So does anybody have any questions? Feel free to unmute yourself on the Zoom. I see Shanice might have a question. Mm-hmm. Yeah, great question, Shanice. So Shanice asked the question for those who couldn't hear her, and that will we be covering like business and legal entity setup? Now, Shanice, are you guys gonna have an attorney come into the program? Do you know? Got it. Okay, so usually the attorneys handle that, but since you did ask the question, right? We got an elephant in the room. Let's just go ahead and attack the elephant. So, one, I would say LLC, limited liability company. If you don't have a limit, basically, if you're running a business, even if it hasn't made any money, or if you only made a dollar in revenue, you should have at least a limited liability company, an LLC. An LLC is a legal entity that allows you to basically set up a company, a legitimate registered business that has its own tax ID number, EIN number, which is basically the social security number of the company, and most importantly, separates your personal assets from the business assets. Meaning that if somebody were to try to sue your company, right, they can only take what your company owns, not what you own personally. However, if you have a sole proprietorship or you're doing business in your personal name, you're signing documents in your own personal name, that's going to get you in big trouble. Because what can happen is that person can now sue you and take everything you own, including your house, your car, your clothes, your shoes, all that, right? Anything that's deemed valuable. So you want to get an LLC set up. And then if your business profit is $40,000 or more, right, $40,000 or more, then you want to elect your company to be taxed as an S corporation, which saves you on self-employment or FICA taxes, which in America is 15.3%, right? 15.3%. So if your business profit is $40,000 or more, profit meaning revenue, income that you're making, minus expenses, the money you're spending, revenue minus expenses equals net profit. If the net profit is $40,000 or more, then what you want to do is you basically want to elect your company to be treated as an S corporation. An S corp is not a legal entity. It is merely a tax election that tells the IRS, hey, I want to be taxed as an S corp. So don't charge me self-employment tax because I'm no longer self-employed. I'm employed by my own company, which happens to be an S corporation. All right, so C corporation that elects to be taxed as an S corporation is fine. Typically, you don't want to be running just a regular C corporation because there's a thing called double taxation. So I would say, Shanice, to answer your question, LLC is usually the way to go for pretty much any business entity. And then once your business profit hits $40,000 or more, then you elect your company to be taxed as an S corporation. So hopefully I've answered your question, Shanice. We will be covering this tomorrow during our real estate agent presentation from 12 to 12:45 p.m. Central. Absolutely. No problem at all. All right, last call for questions. Last call for questions. Any questions? All right, last call for questions going once, going twice, sold to the rest of the beautiful evening ahead of us. It is good weather in Chicago and probably going to go out for a walk. But with that, let me go ahead and stop the recording. Thank you, everyone, for joining. I pray that you gain some value, some knowledge, and education from what has been presented tonight. If you have any questions, please feel free to ask your question via email at jb@badutaxservices.com. Once again, jb@badutaxservices.com. You can also call the office number at 773-819-5675. That's 773-819-5675. You can check out the infinite resources available at jeffbadu.com. Once again, that's jeffbadu.com, jeffbadu.com. And with that, hope to see you tomorrow at the real estate agent presentation. Remember, you do not need to be a real estate agent to attend. That's from 12 to 12:45 p.m. Central. Just shoot me an email at jb@badutaxservices.com. Once again, that's jb@badutaxservices.com, and I can send you the direct link. And then also tomorrow from 6 to 7 p.m. Central, 6 to 7 p.m. Central, one of our biggest events of the year. It's called Be Your Own Bank. We're teaching you how to be the bank. Instead of relying on a JP Morgan, Chase, or the Bank of America, we love these people. But imagine if you can be your own bank on top of having them as an option. So we're doing that from 6 to 7 p.m. Central via Zoom. You can feel free to RSVP by texting WEALTH, the word WEALTH, to 773-819-5675. Once again, that's 773-819-5675. For those who were expecting me to be on the radio tonight, it didn't happen, right? Because we're having this presentation with the Chicago Urban League. And we'll be doing the same thing next week as well, next Monday, talking about business credit. We'll be on the radio the following Monday after that, right? The following Monday after that. And so with that, I hope you all have a great and awesome evening. If you need anything from me, hey, I'm always here at your services. And with that, hope you all have a great night. See you guys. Have a great night. No problem. Thank you. Thank you.